We're joined now by the former U.S. Trade Representative for China, Jeff Moon, now founder and president of the international trade consultancy, China Moon Strategies. Good to have you here, sir.
Thank you very much for inviting me.
You worked both for the Obama administrations and the Bush administration, correct?
Correct.
Okay, great. And I just wanted to set the table there. So listen, the White House's ultimate goal, the administration's ultimate goal here is to get China to open their markets more to U.S. products and also to curb this industrial policy that by default ends up hurting American companies. These methods, do you think they're going to work?
Well, certainly on the front end, the purchases, we think that is definitely going to result in positive impact. However, in terms of changing policies, that's going to be a lot harder. The administration has yet to really define its goals in that regard. USTR has pointed out several areas, but we don't have any specifics yet. And I think that if the administration tries to seek a broad repeal of the China 2025 or other broad policies, that's not going to succeed. If, however, there are targeted requests that can improve the playing field for American firms in China, then we have a possibility there.
Haven't there been targeted requests? I mean, I've heard Wilbur Ross talk about how banking licenses that the Chinese have promised for decades and never materialized. I mean, there are things they could do immediately that would satisfy some very specific asks, but they seem to have been quite reticent.
Yes, the banking licenses and insurance, those are, I think, sort of more transactional things that would open specific sectors. But I think in terms of policy openings, we're looking at broader things in terms of technology transfer, licensing practices, investment practices by the Chinese, cyber intrusions. Those are the kinds of things that we're talking about. And I'm thinking more about measures like waiving joint venture requirements to avoid forced technology transfer or to ease up licensing practices in general.
On the flip side, if they were going to be more combative, we've spent a big part of the morning talking about their options, how they have limited runway on tariffs themselves. But what do you think they do have in their arsenal ex-tariff, whether that's on currency or on a micro level, individual companies, that kind of thing?
Well, just looking at the quantitative numbers is a bit misleading because the Chinese have a number of active and passive measures that they can take. They can take active measures like impose tariffs, but they can also launch tax investigations. They can be stricter on antitrust due diligence. They can look into a variety of cyber practices. And on the passive side, as you said, they cannot buy treasury bills. They cannot approve, for example, medical products, biopharmaceutical products that we want to sell, agricultural sales. So they have a wider variety of actions, I think, on this area than we do, mostly because the difference in China is that the government is both your regulator and your customer. And so they have a lot more authority than the U.S. government does with respect to the U.S. market.
But, Mr. Moon, it's not as though previous administrations, including ones you worked for, have not been aware of this behavior and have tried, at least to some extent, to change it somewhat unsuccessfully. Do you think the Trump administration is going about it correctly? Or if there was another way that would be effective, what would it be?
Well, the good news is that they have the Chinese attention in a way that we haven't been able to obtain before. I do think, though, that a little less rhetoric and a little more policy talk might be more successful. There are pathways to a settlement here. During the Obama administration, for example, there was a bilateral investment treaty that was being negotiated. There was substantial progress made. There are market openings that are available to us. The Trans-Pacific Partnership also contains many of the principles that would address a lot of the practices that USTR is now trying to raise with the Chinese. So there are less combative ways to address this. And what I fear the most out of what's happening right now is that wildcards are going to enter into the picture. For example, nationalism has been alluded to in your previous segment. The more we stoke Chinese nationalism, the less the settlement remains in the hands of the Chinese government. And the more Congress gets involved, for example, with regard to ZTE, the less President Trump has the ability to control the course of the negotiations. So these wildcards that are now entering the picture for the first time are especially troubling at this stage in the negotiations.
Dow is down 400 points at the moment.
Are there examples of this kind of nationalism that you could point to in the past that would be sort of helpful for people to understand in terms of where it's possible the Chinese would go?
Well, just a year ago, the government encouraged a boycott of Korean products. The Koreans agreed to host some of our missiles. The Chinese were very upset about that, so the Chinese shut off all tourism. They imposed investigations on Korean firms. They discouraged purchases. This spreads very quickly in Chinese social media. And a few weeks ago, we actually saw the beginnings of something like that, but the government has tamped it down. Now the government is saying that it's going to impose comprehensive quantitative and qualitative measures. Well, these are the kind of qualitative pictures that now come into the picture.
Yeah, when we started to see iPhones getting smashed in the street, I think most people assumed it was highly anecdotal, but you think that could happen at scale and with the encouragement of the government?
It's currently anecdotal, and this is something that the government will try to control to a certain extent, but my fear is that it gets out of control. Not only has this happened with regard to...
No, sorry, go ahead. Go ahead. Finish
Not
your
only has
point.
this happened with regard to Korea, it's also happened with regard to Japan. There are real visceral emotions in China about Japan, and this bubbles up from time to time, and the government tries to control it and does so successfully. But the government is saying, at least in its statements, that it's starting to take the gloves off. So we have to watch this spot very carefully.
All right, so give me your prediction here. How does this all end up, given you had 21 years of experience in terms of as a U.S. diplomat and in Republican and Democratic administrations? Where does this end up in your prediction? Understanding that you may not be right, but I'd love to hear.
Well, I still think that there's going to be a settlement. The alternative is mutually assured destruction. And the Chinese goal here is to maintain the status quo. The U.S. goal is to get some policy changes and some reduction of the deficit. I think all of that's possible. We need to tone down the deficit, or we tone down the rhetoric. And if we look at past history of President Trump's negotiations with North Korea on nukes, South Korea, with regard to the Korean-U.S. trade agreement, the president has employed a lot of rhetoric, but in the end, in every case, has settled for fairly modest terms. So I think a settlement's likely.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.